Hi, everybody, and good afternoon. My name is Benjamin Silverstone, and I am an equity analyst here at ABG. Today, I have the pleasure of having Jon with me today. Jon Sigurdsson is the CEO of Össur, a very interesting company from Iceland, which is listed in Denmark in Copenhagen. Jon, thank you very much for taking your time to be here today. We look very much forward to your presentation. Thank you very much.
Thank you, Benjamin. And thanks for the opportunity. I will go through a presentation on a more like a general presentation on Comparative Profile. I'll go through what we are, go into the market we are serving, and the equity case in general. And if we look at the first slide there, if we look at Össur at glance, we are obviously a medical device company. We are a global leader in non-invasive orthopedics. We do not have implants. We have a direct operation in 27 countries, and there is a 3,500 there full-time employees, but there are closer to 4,000 now. We are very innovation driven. We have about 5% of R&D cost compared to top line, and we have about 1,700 granted patents because of our equity case is so based on technology upgrade. And there are new products, a lot of products. I believe we have about 650 products. We are very close to being a complete solutions provider, so our customers do not need, even though many of them do, they would not need to go elsewhere. We have a very profitable growth. We have organic and acquisitive sales growth, combination of it, and since listing in 1999, we have about 18% compounded growth rate on the top line. We have our EBITDA margin is typically about 22%, but in 2019 we had a very bad results due to COVID, but despite that we were able to show 15%, and we very much expect this to get into this the normal run rate when the COVID is over. Now, we are listed, as Benjamin said, we're listed in Nasdaq Copenhagen, and we have done dividends and share buybacks. I'll cover that later. We are very cash generative, and we have a very international shareholder base. The next slide, please. We divide the company into prosthetics and bracing and support. This is called the O&P industry. Bracing and support is the O of that O&P, and prosthetics is the P. We about a little less than 60% of our sales is prosthetics, 40%, little over 40% is bracing and support. Now, next slide, please. Now, this is the global footprint of the company. We are headquartered in Iceland, where we have about 500 of those little less than 4,000 employees. If we have a headquarters, our marketing headquarters in US are in California and in Holland in Europe. And you can see that we are relatively big in US, where we have about half of our sales is, and that's obviously one market, even though Canada and South America are counted within, that's the biggest in US, and we are probably the biggest provider of O&P solutions in US. And we are considered to be a high-tech company, and if you would ask our customers, they would probably say that it's a quality product, high-tech product, but we are expensive, and we are. I mean, we are catering to the top echelon of the market. We have about a little less than 10% is in APAC region. The biggest there would be China, and Australia is quite big as well, and Japan. And so we are catering to, until now, we've been catering to the more sophisticated part of the market, which is typically the Western type market. Next slide, please. If we look at the market, the prosthetics, at manufacturer's level, then the prosthetics is little less than $1.5 billion. Our market share there is 23 to 24%, and you can see it's a quite consolidated market. Us and the biggest player, two of the biggest player there, is have almost 60%, 55+% of the market. So this is quite consolidated. As a different with the bracing and support, where it's very fractured, it's very lot of small local players. Reason why we are in that market is that part of our customers, or big part of our customers, excuse me, will have orthotics also as a in their offering. So we are trying to cater to both. Market growth would be 3 to 5%. Both market, where the difference there is a lot of technology trade-up going on in prosthetics. Volume growth is slower than bracing and support, but there is a profound technology trade-up, which basically mean more money per patient. Next slide, please. Now, we have divided our strategic pillars on innovation, growth, and efficiency. And innovation, it is technology trade-up. That's a very big part of our strategy. It's a very big part of our equity story. And the growth, as you've seen, and we've had a very impressive growth. And then there is a efficiency or economic of scale built into the model, that even though that we've been buying a lot of companies that typically will have a lower profit margin than us, we've been able to keep up our profit margin, and the profit, of course, then grows accordingly. Now, if we look at the first then, or the next slide, and that shows a schematic picture, or kind of explains the technology trade-off I was talking about. And we have in the x-axis, we have the time, and then the value on the y-axis. And we can see that over time, a typical product, and this is one example of a product that have been changing. If we go 30 years back, those were less than $100 a piece. And then there is a technology trade-up, carbon fiber coming in, and then it's increase up to 2,000 typically. This is an example, of course. And then there is a further on 8,000, 10,000, and now we have a combined systems, numerous of them, that goes for tens of thousands of dollars. And of course, you can imagine that what that does to the market, and the penetration of those high-tech solutions are very low. There's a relatively few numbers, but now they are about 1/5 of our what we call bionic, which is more computer-controlled artificial intelligence, smart legs, if you like. They represent about 1/5 of our sales. So those solutions are reimbursed because I forgot to mention in the marketing slide, basically all of our products are reimbursed, or we are basically 95+. That is the only market that is there's of a certain size that do not have reimbursement is China. But I guess that the rest of all the rest would be reimbursed, and the people generally do not pay for it themselves. Hence the overrepresentation of the developed market in our sales. Now, as I said before, we believe that this is the future of O&P, prosthetics, and even though it's quite cumbersome to get reimbursement for those expensive products, and there is a lot of thresholds put in the way of those products with all the reimbursement authorities around the world. I mean, people will get them, but there are severe restrictions of it. And we saw that in the mechanical feed solutions, carbon fiber. We've gone through it over and over again. There is a lot of restrictions put in place, and the reimbursement system will say, okay, it's a good system and it's helped our patients a lot, but we will only allow certain few to get reimbursement. But I mean, there is a absolutely certainty that those will, since those improve people's quality of life considerably, there is no doubt that those products will be accepted as those products have been accepted in earlier times. Because this $2,000 food that was met with the same skepticism 20 years ago the bionic solutions are met now. They said, okay, we accept very few, but now it's just a mainstream product and nobody would ever dream of putting restrictions in that. So this is an evolution. This also mean that when we come out with those really good products that change people's lives, and they really do, then there's expectations on the market that these are the blockbusters that come in because everybody wants them. The reimbursement system means that our growth is gradual. It's not kind of a blockbustering that we can sell like the drug companies that could sell a lot when they introduce those drugs. So this is the technology trade-off. So if we get the next slide, and that is it's a picture on our valuation model. There's a technology trade-off. I spent a lot of innovation, technology trade-off, partnership services, which is very important for us. And because of our relatively size, we've been able to tie our customers with us with all kinds of services, reimbursement services, technological services, all kinds of services, and expanding the value chain. We are now a few years back, we started the journey on partnering up with our customers, buying our customer forward integration in certain markets. Geographic expansion, we believe that Asia is a very exciting market for us. China has been doing very well. And then acquisition, we are quite acquisitive. We probably buy 2 to 5 companies every year. So we consider that as one of our competences. So this is kind of the equity model of the company is basically based on those pillars. If we look at the next slide, please. And then the growth story, I'm not going to spend a lot of time on it. And of course, we have 2020, which is quite abnormal year. I would underlining very strongly that we believe that the COVID does not have any long-term effect, positive or negative, on our business. Of course, temporarily, when market has been closed down, the sales have suffered. and we see that, but we are nowhere near any existential threat. We had that scare for a few weeks back in 2020, but that we realized quite fast that even though it was not a great business, we were nowhere near any danger there. So and the payout ratio, we have temporarily halted our share buyback program. We expect we will come back to that when our business is more normal, which is fast approaching a normal run rate. The next slide, please. In interest of time, I'll not go through that. And the next slide, please. That is just to show that the very strong cash flow. The financial target is that the net interest-bearing debt is 1.5 to 2.5. We are over that range now because we are dragging with us very bad COVID quarters, but we will get very fast out of that when already now. And and the share buybacks and dividends. Next step, please. The next. We were WIPO ranked us as a second in the world, I believe, after Toyota, and that's just underlying our emphasis on technology trade-off and how effective our innovation muscle is. Next slide, please. We are very proud of the fact that we are partnered to UN Sustainable Development Goals, 4 of them, good health and well-being. That obviously very important for the gender equality, responsible consumption and production, and then climate action. And further on that one. We will be this year, we are extremely proud that we will be carbon neutral. I believe that we are by far the first one in this industry that achieved that. We are obviously helped by the fact that part of our operation is in Iceland, so all the energy here, all the electricity here is a hydropower, so it's have a zero carbon dioxide footprint. So the next slide, please. So this basically sums it up.
Thank you very much, Jon. Thank you for a very interesting presentation on Össur. So we have a few minutes for some Q&A sessions, and to begin with, just to sort of give a broad understanding to listeners who might be a bit new to the case, could you give just a brief highlight on how the competitive situation is like in the OMP industry and how Össur sort of stands out and remain their competitiveness? I do remember also you mentioned that you have your business partnerships with the individual OP clinics. Could you perhaps just also mention how that is potentially linked to how you actually get Össur products out to the individual clinics and how they decide which brands they're going to carry? Thank you.
Yeah, I mean, the competitive landscape in the prosthetic industry is, and prosthetic is orthotic is a little bit different, but the dynamic is that we have the 2 biggest player have in probably over 55% of the combined market share. So it's a very consolidated market, and we have basically no number 3. I mean, there would be much smaller than us. So and there would be only 2 companies that are able to offer a complete solutions, and we believe that will be a big advantage going forward, where we have chains coming together and and more sophisticated customers that want to have a complete solutions. That is, the market is pretty much put together in such a way that our customers typically buy components from various manufacturers. And by the way, we are not the end seller. I mean, our customers are the one who get the prosthesis together and bill the reimbursement, and they are servicing the customers. Now, hence to your question, who is the decision maker? This is a typical medical device, so the customer typically doesn't decide. The decision maker doesn't pay, and the payer doesn't decide. Then it's a quite complicated as all medical device. So, but I would say in most instances, the decision maker is the prosthetist, our customer. Of course, the doctor will prescribe it in order to get a reimbursement. But having said that, very few doctors do have the knowledge of deciding what product. So the prosthetist will decide. Patients in some few examples, but it is the prosthetist.
Thank you very much, Jon. A last question would be in terms of how you see the next sort of mid to long-term growth drivers. You do mention tech trade up, but for the people who are new to the case, could you just please elaborate a little bit on what is going to drive the industry in the next couple of years?
Well, I believe that there is a lot. The technology trade up will be a very exciting journey, and our penetration rate, let's call it the bionic, or I mean, it's kind of an artificial categorization. I mean, there's a lot of technology trade up going on, and we can see that most of the solutions, by far, most of the solutions are fairly low tech, simple products, and we can see a huge opportunity to improve quality of life for our customers, and that will continue. And I think it's a very exciting journey. But there's a lot of it's not easy, because there's a lot of resentment. There's a lot of resentment from the payer part, because they have to pay more. And but I believe that there is no question that the only question is the speed it will go on.
I agree. Thank you, Jon. The final question is in terms of the case itself. So if we look at growth historically, it has been a very good mix of organic and acquired growth. You do mention that you're obviously very actively looking at acquiring new companies, and you have been doing so in the past. Could you just give the people listening in an idea of which companies you are looking at, which sort of profile are you looking to add to the Össur group or Össur family, so to speak?
Yeah, I mean, there are three, I would categorize in three potential acquisition targets. First of all is exciting product lines, which we have been adding, and we have a long history of doing that. But having such a relatively big market share, the competitive restrictions are getting in a way that we could probably not buy a reasonable big product company within the industry unless we would go in for all of the competitive authorities. But so we have kind of stopped focusing on that, but looking at technology, start with exciting new technology. The second one would be at this distributors, with typically former distributors, that because we believe that because of this is a technology trade-off, we are not selling, in very many instances, we are not selling a me-too product. We are kind of educating the market. So So we've basically found out that we need to be in the market. We cannot be very effective educating the market through a distributor that knows that when they are successful, we'll kick them out and take over ourselves. So I mean, we cannot expect them to invest enough in the market. So we, in those markets, and that's the reason why we are direct in 27 markets, is for that reason. The third group is then also distribution chains that are our customers that are serving the market. And we believe that this market will become in not maybe all the places, but in very many markets, this will be a vertically integrated market.
Thank you very much, Jon, and thank you for the very thorough presentation and a very interesting case. In terms of the time, I think we'll have to end the presentation here. But thank you very much for taking the time to be here today.
You're welcome, and thanks for the opportunity.